So this night, let's look at taxation of insurance. Once we are done with insurance, we are going to taxation of real estate. We are going to look at that towards the end of the diet. So once we are through with insurance today, we move to another topic called tax audit and investigation by next week. So that means once we are through with insurance, we are done with this topic called taxation of specialized business. So the only one that is left remaining is taxation of real estate investment scheme. But I'm going to discuss that toward the end of the diet, or my colleague, my senior colleague, I think he will be the one to discuss that too, taxation of real estate investment company. So this night, we are going to look at taxation of insurance company. How do we tax insurance business in Nigeria? As we all know, recently, in a couple of weeks ago, a new law was signed called Insurance Act, Insurance Reform Act. So this Insurance Act that was signed has made a lot of changes to insurance industry as regards to the capital base of the insurance company and the regulatory requirements, and so on. Also, he also made some changes to classification of some certain expenses in the book and record of insurance business. So these key changes to insurance industry stated in the new Insurance Act may also affect the tax. So that means for the insurance company now, as from next year, January 2026, they have to follow the Nigeria Tax Act law, the Nigeria Tax Administration Act. You understand? They will also have to follow the new Insurance Act that was signed into law. This will result into a lot of changes to their book and record. So what we want to look at today is the current tax implication of insurance company in Nigeria. The current tax implication of what? Insurance company in Nigeria. What we are using currently in computing the tax liability of insurance company in Nigeria, as stated in the Finance Act 2021, as stated in the Section 14 of CITA, Company Income Tax Act 2007, as amended. Insurance company, we should know that if you want to tax insurance company, you have to tax them separately based on their line of business. What we are saying is, basically, we know that insurance business, we classify them into two. We have life insurance business and we have non-life insurance business. Under the tax law too, this Section 14 of CITA is saying that when a company, an insurance company, is operating a composite insurance business, they have to pay a separate tax liability for their life business, and they have to pay a separate tax liability for their non-life business. That means for insurance company, they will pay, we have to compute their tax liability for their life income separate, and we also need to compute their tax liability for their non-life business separate, which is general insurance. That is what we need to know first. And another thing we should know, the major difference between taxation of life assurance business and non-life assurance business. One of the major business difference on how we tax life assurance business and non-life assurance business is the treatment of premium. In life business, premium received from assured is not an income. But in non-life business, premium received regarding to different policy is an income to the insurance business under the tax law. Under the tax law, for insurance business, for life, premium is not an income to them. But for non-life, premium is an income to them. That has to do with another thing that we can look in the area of the difference is one of the expenses. We all know that the major expenses of an insurance company is claims paid to the assured, claims paid to the policyholder. For the area of claims, under the life, claim is not an allowable expenses. That means while you are computing the tax liability of a life assurance business, you cannot deduct claim from the taxable income. But under the non-life, claim is an allowable expenses. You can deduct it. So that is that. Now, let's look at key changes introduced by Finance Act 2020 to the insurance industry. Prior to Finance Act 2020, insurance industry can only carry loss forward for maximum of 4 years. But Finance Act 2020 now lift the restriction of carrying forward loss. That means insurance company, as from year 2020, January 2020, they can carry their loss forward indefinitely. But now they can't carry their loss forward. Now they can carry their loss forward indefinitely. But before Finance Act 2020, they can't carry their loss forward. Another changes made by Finance Act 2020 to insurance company is what is the composition of insurance income. Under the Finance Act 2020, investment income is one of the major income of a life business. And this investment income, what is the definition? Finance Act 2020 define investment income as an income derived from shareholders' fund. Income derived from investment of shareholders' fund. Financial 2020 also differentiates between gross income and gross premium. Gross income means your total income for that year. That means your total taxable income. While gross premium means the total premium that you receive from the policy holder. And this gross income, Financial 2020 is saying that this gross income under the life business is only investment income that investment and other income that comprises of gross income under the life business. While under non-life business, your gross income consists of premium, gross premium, plus investment income, plus other income. These are one of the changes made to the insurance company by the Finance Act 2020. Now, for the sake of time, let's look at the format for computation of tax liability for a live business. What are the formats for computation of tax liability for a live business? If you want to compute tax liability for a live business, you have to first start from investment income. Your investment income means debenture interest, interest on fixed deposits. This is investment income. After investment income, you will have another income called other income. Under your other income, the following consists of your other income, like brokerage fee, management fee, any other fee that serve as an income to the insurance company. They will fall other income. They will fall under other income. Commission received too is an other income. Actuarial revaluation surplus is also an other income. Rental income too is also an other income. At the end of the day, when you plus your investment income plus other income together, you will get what is called gross income. You will get what is called gross income. Once you get your gross income, you will now less some of the allowable expenses. Some of the allowable expenses stated for insurance company. One of the allowable expenses that you are allowed to deduct under insurance company is provision for general reserve. Provision for general reserve is an allowable expenses under insurance company, under the life business. How do we get your provision for general reserve? Well, if you want to get your provision for general reserve carry forward plus life fund carry forward, life fund account carry forward. You compare it with your net liability on policy. The lower between the two will be your provision for general reserve. The lower between sum of general reserve carry forward plus life fund account, you add the two and you now compare it with net liability on policy. The lower between the two will be your what? Your general reserve. Another expenses that you minus as your allowable expenses is called special reserve. This special reserve, how do we get it? Higher of 1% of gross premium or 10% of net profits. Higher of 1% of gross premium or 10% of net profit. You will get your special reserve. So after getting your special reserve, another expenses that you minus is other allowable expenses. Other what? Allowable expenses. What are the other allowable expenses that you have? Under the other allowable expenses, management fee, rent, salaries, repair and maintenance, any other expenses that is allowed that pass the test of wholly reasonable, exclusive, and necessary. You put them under other allowable expenses. Salaries and wages, repair and maintenance, printing and stationaries, rent, and so on like that. You put them under other what? Other allowable expenses. Now, number one expenses, general reserve. Number two, special reserve. Number three, other allowable expenses. Addition of the three, you add them together. You minus it from your gross income. Once you minus it from your gross income, you will get your what? Adjusted profit. So if you get your adjusted profit, in case there is any loss brought forward from the previous year of assessment, from the preceding year of assessment, any loss brought forward, you relieve the loss. If you relieve the loss, you will get accessible profit. From accessible profit, you can now less capital allowance. Once you less your capital allowance, that means your total profit, you will get your total profit once you remove your capital allowance. Once you get your total profit, you can now compute your tax. Insurance company, they will pay, currently, insurance company, they are paying company income tax, tertiary education tax, they also pay NICDA, they pay police development levy. These are the major tax paid by the insurance company. So you compute it. You compute your tax. However, the minimum tax for life insurance business, what is the minimum tax rate for life insurance business? The minimum tax rate for life insurance business is 0.5% of gross income. The minimum tax rate for life insurance business is what? 0.5% of gross income. These are the tax formats for computing tax liability of life insurance business. Now, let's look at the tax format for computing tax liability of non-life insurance business. What are the tax formats? For computing tax liability of non-life insurance business. For the non-life, how do we compute the tax liability? We start with gross premium. From the gross premium, we less premium return on cancelled policy. Once you less premium return on cancelled policy, you also less reinsurance premium. You also less what? Reinsurance premium. Once you less reinsurance premium paid, you will get what is called net premium. You will get what is called net premium. After getting your net premium, you will now add investment income. What are the investment income? Debenture income, debenture interest, interest on fixed deposits. You also add your other income. What are the other income? Fees and commission income, rent received, any other income that is not premium, that is not investment income, you classify them as other income. At the end of the day, the other income of life insurance business, one of the other income is called estimated insurance claim of previous year. Estimated insurance claim of previous year will become an income in the current year. Estimated insurance income of previous year will become a what? An income in the current year. It's an expenses last year. It will become an income in the current year. So it will become an income in the current year. This is one of the major other income of insurance company under the non-life business. After you get your gross income for your non-life business, the next thing that you need to do is for you to less reserve or provision for unexpired risk. Reserve for provision for unexpired risk. Reserve or provision for what? Unexpired risk. Reserve or provision for unexpired risk, you less it from the gross income. After that, you will now less commission paid too. You less commission paid is part of the expenses. Another thing you less, other allowable expenses is part of the expenses. Rent, salaries and wages, repair and maintenance, they are all other allowable expenses. They are all other allowable expenses. The major expenses that you also less other than non-life business, the major expenses that you also less other than non-life business is called insurance claim and outgoing. This insurance claim and outgoing, we have two. We have actual insurance claim. We have estimated insurance claim. The two of them together, you add them together, you also less them as an liable expenses under the non-life business. You also less them. Once you less all these expenses I mentioned, you will get adjusted profit. From your adjusted profit, you will less loss relief. After you less your loss relief, you get accessible profit. From accessible profit, you less capital allowance. From there, you get the total profit. You can now compute your tax. Please note, for non-life business, the minimum tax rate for non-life business is 0.5% of gross premium. The minimum tax rate for non-life business is 0.5% of gross premium. For the life, their own minimum tax rate is 0.5% of gross income. But for non-life, its own minimum tax rate is what? 0.5% of gross premium. So this is what we need to know on insurance business tax computation. We can start by looking at some questions. Do we have any question? Question 6. Let's start from question 6. Somebody should help us read the question 6.
Below is an extraction made from the financial statement and income return of Premium Insurance Limited for the year ended 30th June 2020. The figures are assumed to be accurate. Okay. Net profit before claims and outgoing 36 million in 2020, 28 million in 2021. Esteemed claims and outgoing 12 million in 2020, 8.7 in 2021. Actual claims and outgoing for the year 7.5 in 2020, 9.2 in 2021. Required, compute the accessible profit for the relevant tax years.
Okay, thank you very much. So now, this net profit before claims and outgoing means the adjusted profit. They have minus their liable expenses. They have minus their liable expenses. They have minus this. They now get the adjusted profit, but they do not minus claim. How do we adjust for claims? How do we adjust for claims? This net profit before claims and outgoing, we minus claims as an expenses. We minus the two claims. Take, for instance, for the one of 2020. For the one of 2020, the estimated claims is 12 million. The actual claim is 7.5 million. When you minus the two, that means your accessible profit is what? 16.5 million. That is what we are asked to do. But in 2021, the net profit before claims and outgoing is 28 million. There is now additional income. Which one is additional income that we had? Which one do you think is an additional income? The additional income means this estimated claim of 2020 in the 2021, what is it going to become? It will become an income in 2021. Estimated claim of 2020 will become an income in 2021. Estimated claim of 2021 will become an income in 2022. That means estimated claim that we have estimates in the expenses of 2021, 2020 accounts, we will recognize it as an income in the year 2021. We will recognize it as an income in the year 2021. Look at it. We have minus it as an expenses in 2020. While computing the assessable profit of 2021, we add it again as an additional income before minusing the estimated claim of 2021 and the actual claim of 2021. That means our assessable profit for 2021 is 22,100,000. $22,100,000. So this one is just a direct question. Let's look at another question. Let's look at another question so that we understand this insurance company very well. Question 8. Let's look at question 8. You can help us read the question 8.
Life insurance Life Nigeria Insurance Company PLC is a life assurance company. The company provides insurance cover for life contracts. Below is the extract from financial statement for the year ended 31st December 2020.
Okay.
Actuarial supplement. Okay, yes. All the figures are assumed to be correct. Count. Okay. I'll read it. Actuarial surplus 617 million. Investment income 792 million. Fee income 123 million. Other operating profit 4.5. Life fund account as at 31st 12 2020 590 million. General reserve 85. Gross premium written 1.6. Profit before tax 564. Management expense 316. Depreciation 90 million. Commission paid 58 million. NITDA levy paid 438. Capital allowance claimable 16.5. Net liabilities on policies as at the first of 2020 600 million. Admin expenses 283 million. Compute the taxes and levies payable for the relevant years of assessment, taking into consideration the relevant amendments to the tax laws. Ignore VAT.
Okay. Thank you. What type of insurance business is this? This is a life insurance business, Abi.
Yes, sir.
Yes, yes.
Sorry, can anybody
We have lost his audio.
Yes.
Can you see the format now for life insurance business? This is the format. For the investment income, debenture interest, interest on fixed deposits. For other income, fees, management fee, professional fee, commission, actual valuation surplus, rental income. So going back to this question now, when you look at this format very well, let's go back to the question. Let's go back to the question. This is the question. In this question now, we have investment income. Our investment income is lumped together. This is the investment income. Actuarial surplus is part of other income. Actuarial surplus is part of other income. Fee income is also part of other income. Other operating income is also part of other income. Any other income again? Any income again from this question? Do we have any income again? We don't have. So what we need to do, under investment income, we have interest on fixed deposit, which is this other investment income. Under the other income, we have fee, we have other income, we have actual valuation surplus. These are the three major income we have. At the end of the day, we add all the income together, both investment income and other income. We get gross income. What is the gross income? What is the gross income? The gross income is 1,538,37,748,280. Now, you will now less the relevant allowable expenses. Number one relevant allowable expenses that you will less is called general reserve. How do we get our general reserve? General reserve carry forward plus life fund account. That means these two, we add it together. These two that I colored in color blue. Let me change the color. Blue is not clear. color red. Let me color them color red. These two that I color in color red will be added together. Once you add them together, you compare it with what? Net liability on life policy. You compare it with net liability on policy. You compare it with net liability on policy. Where is your net liability on policy? This is your net liability on policy. You compare it. Once you compare it, what do you get? Which one is lower between the two? Look at general reserve carry forward, 85 million. Life fund account, 590. When you add the two together, it's giving you 676. Net liability on policy, 600 million. That means net liability on policy is the lower one. Is the one that you are going to take as the general reserve and liable expenses. Special reserve. For the special reserve, 1% of gross premium. What is your gross premium? Our gross premium written is 1,659,216,440. 1% of it. 1% of it. It will give you 16 million. 16,592,164. Special reserve is higher of 1% of gross premium or 10% of net profit. 10% of the net profit. Where is our net profit in the question? Where is our net profit? Yes,
Sir,
I can hear you.
okay, sir. What I meant is probably we go to a board. Then investment income. Okay, what constitutes investment income? We will list it there. Everybody will follow you.
Okay.
Then other income. The list again, we put it there. Every other person will follow. Then
no problem, no problem. I will do that. I will do that. Don't worry. Don't worry.
Sir.
So let me just open a fresh Excel sheet. This is a fresh Excel sheet, Abby. So why doing this question now? We start with investment income. We start with what? Investment income. In the question, we are giving investment income. How much do we have as an investment income?
Investment income, you have 792 million.
342,640.
792
million.
342
640.
640.
Yes.
This is investment income that we have in the question. They did not break down the investment income as in the format I gave you. I said investment income consists of debenture interest on fixed deposit. Abby?
Yes.
They did not break it down. They just add it. Now, other income that we have. What are the other income we have? What are the other income that we have?
Actuarial surplus.
Okay. Actuarial surplus.
Surplus.
Okay, how much?
617 million. 617. 104.
104.
040.
040. Correct,
Yes.
like this? Apart from that, what other income do we have?
We have fee income. Fees income.
Okay.
123 million
123 million
781,000
781,000
840. 40.
840.
It's 7, not 6. Hello, sir.
Okay, correct.
781. No, remove the 6 and put 7. 1, 2,
It's
3,
corrected already.
781. It's not
Yes.
correct like that.
1, 2, 3, 781 840.
Yes.
This is it now.
Yes. Okay.
Apart from that,
Okay now.
other the other income, we also have other income.
Other
Abi?
operating income. Yes.
Other operating income.
Yes.
Other operating income.
Yes.
So how much do we have for the other operating income?
4519
4, 5. I want to change the front size so
19.
that we can see it very well.
Okay.
Let me change the front
Okay.
size.
Okay. I'm a calculator. Bad number.
4, 5,
519
19
760.
760.
Yes.
At the end of the day, do we have any other income again? Check the question. Do we have any income again?
No.
Since we don't have any income again, that means our gross income
But sir, we
is
have
going to
life fund accounts.
is not
Is
an
it an
income.
income? It's not
It's
an
not
income.
an
Okay.
income.
Okay.
That means before you can do insurance, what you need to do first, understand the format very well.
Okay.
Understand what?
The
The
format
format.
very well.
Yes. So life fund account is not part of income. So this is what we get as the
Gross
income.
income.
Yes. Now, you now less allowable what?
Expenses.
Expenses. What are the allowable expenses you need to less?
General reserve. General reserve.
First, number one, I can call it A,
Okay.
general reserve.
Reserve.
Abi,
Yes.
for this general reserve,
Mm-hmm.
we have general reserve brought forward, carry forward, sorry. That means general reserve as at the end of the year. How much is the general reserve as at the end of the year?
So how do you find? Where can we find that one?
In the question,
85 million
check very well.
540. 85
Can
is
you
the
see it?
540.
Yes. Yes.
Oh yeah. How much?
85. 85.
85
086
086
6 540
086
5.
540.
Yes. 40. Yes.
We also have life
Gross pay.
fund accounts
Yes.
carry forward. You also have that.
Yes. Yes.
So how much is that?
590
590
90 940
940
000.
000.
No, 000.
000 like this.
Yes. Yes. Remaining one. No, remaining one is 590 million. Yes, correct.
The sum, you add it together. You add it.
Okay.
Can you see that?
Yes.
We are still under the general reserve. You now compare it with net liability. On policy.
Okay.
Net liability on policy. You compare it.
Yes. Okay.
How much is our net liability on
600.
policy?
600. 600.
Yes.
740. 740. Then 000. As in thousand, yeah.
Which one is lower between the two?
Net liability on policy.
Net liability on policy is lower. That will be your
Yes.
first expenses.
Okay.
That will be your first expenses. If you like, you can bracket it because you are going to deduct it from where? You are going to deduct it from where?
From gross income.
Yes.
From gross income.
After that, B, special reserve. Special what?
Reserve.
Reserve.
Special reserve.
For this special reserve, we said
Okay.
1% of gross
Premium.
Premium.
Yes.
This is the only place we use premium under life insurance. 1% of gross premium. What is 1% of gross premium? The premium in the question is what? 1 billion. How much is the premium?
659. 1 billion. 659.
Yes.
216. 440.
This is the premium times
Yes.
1%.
Okay.
Yes, 16,592,164.4.
It's okay.
16,592,164.4.
Okay. You are right. For special reserve, we said in the case of special reserve, higher of either 1% of gross premium or 10% of what? Net profits. What is the 10% of net profits? Our net profit in the question. What is our net profits? Profit before tax. Profit before what?
Before tax. Okay, 56,605,440. 10%.
Times 10%. Which one is higher?
Net profit is higher.
10% of net profit.
We take that. That is another deduction.
Okay.
That is another deduction.
The general
Okay.
liability
Eh?
the higher.
The third deduction, number C deduction, is called other allowable
Expenses.
expenses. What are the other allowable expenses? Let's check in the question from the
Administrative
beginning to the end.
expenses.
You
We
start
have
from the beginning. Start from the beginning. Start from the
okay.
beginning.
All right, sir.
What do you think?
Management
This one,
expenses.
management expenses. Oh yeah,
316.
management expenses.
Yes, sir.
316,
389.
389,
080.
080.
Yes. We have
This is
commission
the
paid.
commission paid.
Yes.
How much?
Commission paid 58 58
58,
086
086,
560.
560.
Yes, sir. Then we have
Oh yeah,
administrative expenses. We have
administrative.
administrative expenses. Expenses.
Oh yeah,
283 283
oh yeah,
667
667 and what?
860.
860.
Yes, sir. Final.
Sir, how about the NITDA levy paid?
NICDA levy is an expensive too. It's an expenses. It's an expensive. When you pay NICDA, you can allow it as you can deduct it as an expenses.
Is
When
allowable.
you pay, it's allowable.
Okay.
That is the unique thing on NICDA. How much?
428
Yes.
986.
Any other one again? Let's check.
Let me check.
Okay, there's no any other one. In that
Yeah.
case, the total of these other allowable expenses, starting from year
The calculator.
to year.
616.
Abi?
613,572. Okay.
Yes. Yes.
Okay. Or do you want to calculate that one on your own?
It's okay.
So at the end of the day, you will get adjusted what?
Adjusted profits.
Profits. How do you get adjusted profits? You minus all these expenses from
On gross income.
income. you minus. You minus. You minus them. So you get your adjusted profits. This is your
Yes.
adjusted profits.
Yes. Not less our capital allowance.
So you now less
Capital
what?
allowance. Capital
Capital allowance.
allowance.
How do you less it? So how much is your capital allowance?
16
16
592
592
164.
You less it.
Yes. Okay.
That means your total profit is this.
Yes, our total profit is 293,086 naira.
This is your total profit. In that
Yes.
case, you can now compute your tax.
Okay.
The first tax you will compute is your company income what?
Income tax.
Tax. Company income tax. Your company income tax, CIT, at
percent.
how many
30%.
percent?
30%.
30%.
So that means 30% of this amount. A unique thing about
Yes.
insurance company, anytime you are computing the tax liability of insurance company, you
Yes.
normally test for minimum tax. Anytime you compute the company income tax, you test for minimum tax. Minimum tax. What is the rate of minimum tax for life business?
0.5
0.5% of what?
of premium.
Gross premium.
Gross premium.
Gross income for life. Gross
Gross income. For non
But for
for
non-life,
is premium. Thank you,
it's
sir.
premium for non-life. But in the
Thank you,
case
sir.
of life, 0.5% of gross income. This is the gross
Yes, sir.
income, 0.5% of it.
Okay.
Look at it. The 0.5% of this gross income is giving us 7 million. But the actual tax of the CIT is giving us how much?
61 million.
That means if the company want to pay CIT, they will pay 61 million. Assuming the minimum tax is higher than 61 million, that means the company will pay CIT based on minimum tax. Do you understand?
Yes, sir.
Do you understand? Another type of tax that you need to compute is called TET. TET is what?
Tertiary education.
Tertiary
What
education
year of
tax.
assessment do we have in this question? What is the year of assessment? What is the year end?
2020.
2020 is the year
2021.
end.
Year end.
As at 2021,
Yes.
It's
What is the rate
2%.
of tertiary education tax?
2% as at
2%.
2%, sir.
So 2% of what? Is it on total profit or adjusted profit?
On total income,
Total
Adjusted profit.
on gross
On,
income.
on
Adjusted
adjusted profit.
Yes.
2% of adjusted profit.
Yeah.
CIT is based on total profit. Why? CET is based on what?
Okay.
Adjusted profit.
Adjusted profit. So times 2%. Do we understand?
You are following, sir.
Aside that, you can compute NIGDA. NIGDA is what percentage? 1%. What do you say?
That is 1%.
Yes, 1% of what? NIGDA. Insurance company pay it. Bank pay it.
On total profit.
For the NIGDA, 1% of what?
Total
1%.
profit.
No, not total profit.
Yeah.
1% of
Adjusted
profit before tax.
Okay, net profit.
Net profit. 1% of the net profit. That is what NIGDA said. In a question, if you don't know the net profit, you use adjusted profit to compute NIGDA.
Okay.
So, but in this question, do we have the net profit?
Yes.
The net profit is how much?
564. 564.
Yes.
605. 440.
So 1% of it.
Okay.
This is
All
what
right.
is giving you.
Yes.
Another task you can compute,
Police.
PDL. That one is, as at that period, there is no PDL. As at which year? Which year is that?
As at
Which year is that?
2020.
2021.
2021. 2021.
No
They have
PDL.
not started using PDL. They started using PDL in 2022 year of assessment, 2023, 2024, 2025. So this is the question. So any question here?
Yes, sir. Hello, sir.
Okay. Yes.
So that means this year now we are going to compute police tax
In which year?
for year 2025. If we are giving a question for year 2025, we need
Yes,
to
we are
do.
going to compute. Yes, we are going to
Sir,
compute if it
please,
is
what is the
2025.
percentage of the police?
0.05.
0.005%.
0.005%. Okay, sir. Thank you.
Yeah.
Sir, I have a question, sir.
Okay.
Yeah. Are you saying that if we compute the company income tax, that is 30%, or depending on the year, and the minimum tax? So please, sir, in these two tax, which one am I using, sir? Is it the higher? I'll choose the
The
higher.
higher.
I'll
The
choose the higher.
higher.
Thank you, sir.
You will choose the higher. Do we have any question?
go through it and get back to you, sir.
Okay, let's look at one more question. Let's look at one more question. Let's look at one more question.
Okay, sir.
Question 7. Let's look at question 7.
Okay. Global Insurance Company Limited. Are we
Okay,
all there?
you can continue.
Sir, can you please go to the board so that everybody will be, so that I don't read from my hands here. So that it will be I'm reading from the board.
Okay. Oh yeah, continue.
I'm not seeing your board, sir.
Okay.
You can read from your end. We are also seeing it from here.
I've not seen it, but I
That's it.
don't have the note.
No,
Okay.
Which
Oh
page?
yeah,
it's not the
Which
note
page
now.
on the material, sir?
Yes, it's the
Question
material.
7.
87. It's on page 87 in the
87.
material.
Page
Okay.
7, exactly.
87. 87.
Okay. Okay. Thank you, Mike. Thank you, Mike.
Now, Global Insurance Company Limited is carrying on both life and other insurance business. Received gross premium income of 72,050,000 in its accounting year ended 31st December 2023.
go
I
ahead. Go
continue.
ahead.
The
Continue.
total amount of 12 million investment income was also received within the accounting year for life business, while about 25 million was incurred as total expenses. From the analysis of the amount listed below, together with capital allowance given, you are required to compute the tax liability of the company and state the year of assessment. All figures are assumed to be correct. Are we together?
Go ahead.
We are
You can go
together.
ahead.
Okay, sir. 2. The management of the company calculated about 40 million as reserve for unexpired risk as at the 31st December 2022, and about 70,500,000 was also calculated as at 31st December 2023 on non-life assurance. 3. 4 million was yet to be collected as premium on life and 2 million on non-life policy holder for the financial year ended 31st December 2023. 4. As at 31st December 2023, actuarial valuation of life fund was administrative expenses for life department 1,250,000. Salaries for life department staff 3 million. Other allowable expenses for life department 5 million. Number 5, investment income. Dividend received net of 5% withholding tax, which is 375,000. Gross interest received on debenture stock 9,450,000. Interest on fixed deposits in banks 2,175,000. All total together to be 12 million. Interest on fixed deposits of 430,000 for the accounting year ended 31st December 2023 was accrued. Number 6, total expenses related to non-life businesses. We have claim which amounted to 4,875,000. Commission 3,420,000. Administrative expenses 5,430,000. Depreciation 3,025,000. Total together to be 16,750,000. Number 7, loss on sales of fixed assets included in administrative expenses was 1,450,000. and estimated claim for the year 2022 was 274,000. Number 8, capital allowance. Capital allowance brought forward 220,500. Initial allowance for the year 425,000. Annual allowance for the year 802,500. Balancing allowance 100,500. Require compute tax liability for the relevant year of assessment.
Thank
I'm
you very
done.
much.
You're
Thank you.
welcome, sir.
Thank you. Thank you. Now, in this question, what do you notice? Based on what you read, what do you notice in this question?
It is
Can
carrying
somebody
out
tell me?
life and other insurance business, both life and other insurance
That
business.
means this company carry out both live and non-live business. Both what?
Life and non-life.
Yes. Life and
I,
non-life business.
like I told you earlier, I said you need to compute tax liability of life business separate, tax liability of non-life separate. That is what the law said. However, in this question, we have life business and non-life business, but something married them together. The capital allowance given to us in this question is for the whole company. Ideally, they're supposed to say capital allowance for life. Capital allowance for what? Non-life. But they did not do like that. They just give us capital allowance is for the whole company. That means it's for both life and what? Non-life business. So what we need to do, we need to compute adjusted profit of life. Adjusted profit of what? Non-life.
Non-life.
We now add the two adjusted profit what? We add it together. We now less what?
Capital allowance.
Less the capital allowance. We will have compute the tax liability separate, assuming we are giving separate capital allowance. But we are not giving. What we need to do, just compute adjusted profit of life, adjusted profit of non-life. So I think somebody sent a message to the group now that it doesn't have the material that we are using. Please help me share the material.
I want to attend to her. I want to attend to it.
Okay.
I will send the materials now.
Okay. The one that have the solutions. Now, let's go to the work of the day. Let's go and compute adjusted profit for life. Our major requirement is tax liability. But before we compute the tax liability, we have to do a working note. We have to do what? A working note. Working note 1 is for us to compute adjusted profit for life. Working note 2 is for us to compute adjusted profit for non-life before we can compute the tax liability. So let's go back to Excel. Let's use our Excel. I think it's the Excel we are sharing now. Can you see the Excel?
Yes, sir.
Sir.
Okay. So, working notes. I will start with working notes. I have to start with working notes. I will leave a space for the main question. I will leave a space. I'm coming on. Okay. I just want to verify something. Now, working note 1. Working note 1. For the working note, one of the working notes, note 1, computation of adjusted profits. Adjusted profits. This adjusted profits for live, I will say for live business. For live business. How do I compute adjusted profit for live business? First, I will have investment what? Investment income. For the investment income, under the investment income, I may have debenture interest or fixed deposit. Let's go back to the question. Let's go and check. What are the income that relate to life? Look at it. They said at the beginning of the question, the total amount of what? 12 million naira investment income was received within the accounting year. For which what? For a live what? Is for live business. Can we see that statement? Let me share it on the screen. Let me share the statement on the screen. The total amount of 12 million investment income was received for what? Within the accounting year for live business. That means income of a live business is 12 million investment income, Abi?
You are correct, sir.
However, we are given the breakdown of this 12 million. What is the breakdown? Breakdown is given to us. That is note 5. Can we see the breakdown?
Yes, sir.
Out of the breakdown, which one do you think we should take that will be subjected to tax? Which one do you think we are going to take that it will be subjected to tax?
Interest on fixed deposit in bank, sir.
Correct. Interest on fixed deposit in bank. Which other one? interest, debenture interest too.
Debenture, sir. Is debenture interest also subject to tax, sir?
Yes. Dividend is not subjected to tax. Dividend is a frank investment income. Dividend is not subjected to tax. Dividend is a frank investment income. So let's go back to our Excel for better understanding. For our Excel now, how much is interest on debenture? How much is interest on debenture?
9,450,000, sir.
9,450,000. $9,450,000. Interest on fixed deposit, how much?
2,175,000.
2,175,000. Other income. Other income. Other income. In this question, do we have any other income that relate to non-life business? That relate to life business? Check.
Yes, premium income.
That relate to life business. Life.
Life premium is not life.
If you check the format, before you know insurance very well, like I said, you need to know the format. If you don't know the format, it's something. So please, you need to understand the format. Apart from this interest on fixed deposits, 2175 that we write, there is another one, interest on fixed deposit of 430 that was accrued. We have to make provision, we have to add it to 2175. 430, we have to add it. Can we see that accrued interest? Can we see the accrued interest? 430,000 as at the end of the year.
Okay, sir. Yes.
So,
interest on fixed deposit of 430,000 for the accounting year ended 31st December 2023 was accrued.
okay, thank you. Since we can see it,
Number
there's
5.
no problem.
Number 5 before number 6, on top of number 6.
Now, we don't have any other income for life. That means our gross income for life, the gross income for life, what will be the gross income? Addition of the two. This is our gross income. Our gross income is going to be 12,450,000 55,000. We now less what? We less allowable expenses. What are the allowable expenses that we are going to less? First, A, general reserve. A, general reserve. General reserves. For the general reserve, what do we do for the general reserve? In the question, do we have information relating to general reserve in the question? General reserve. Do we have general reserve carry forward? That means general reserve as at the end of the year. Do we have life fund account? Do we have net liability on policy? In this question, we don't have any of those requirements. That means my general reserve is going to be 0. B, special reserve. We are doing allowable expenses. B, special reserve. What are my special reserve? My special reserve, I said 1% of what? 1% of what? Gross premium. Are you with me?
We are
Yeah,
with you,
with
sir.
you, sir.
1% of gross premium or 10% of net profit, whichever one is
In
higher.
this question, how much is the gross premium for life? Life business. How much is the gross premium?
Life assurance.
If you go and look at the breakdown of the premium, the total premium of this company is how much?
72,50,000.
Out of this, how much is what? For
life, 17 million
life.
250.
250. 17
This 17 million 250 was the one that was paid in cash. Do we have accrued interest for life as at end of the year? Do we have accrued interest that is yet to be paid, yet to be collected for life?
We have, sir. 4 million was yet to be collected as premium on life. 4 million, sir.
Please, what note? What note?
3.
Note 3. That means the one given to us, 17 million what?
17 million 250 plus 4
plus
4
4
million.
million. That means the total premium is what? 21 million, Abi? 1% of this 21 million. 1%. That is what we want to compare. Now, this 10% of net profit, do we have net profit for life? Are we giving the net profit for life? We are not giving the net profit for life. So that one is, we are not giving the net profit for life. In that case, we can't get the net profit. We are not giving. So in that case, that means under special reserve, I'm going to recognize 1% of gross premium. C, other allowable expenses. What are the other allowable expenses? What are the other allowable expenses?
We have claim. Eh? It's not like
Other, this is a life. Other allowable expenses.
Administrative expenses for life department.
These admin expenses for life department. There is an additional information. What is the
Yes.
information?
Note 7.
Oh yeah.
And note 7 talk about loss, sir. That is a loss on sale of fixed assets. Included in administrative expenses was 1,450,000 and estimated claim for the year 2022.
This loss of fixed assets. Look at the administrative expenses. The administrative expenses is 1,250,000, Abi?
Yes. Yes.
And a loss on sale of fixed assets included in the administrative expenses was how much? How much is the loss?
1,450,000.
Oh, this one is for non-life. Non-life. It's not for life.
Because the 1,450, the thing is higher than.
Yes. So this administrative expenses for life is what? 1,250,000.
1,250,000, sir.
Yes.
Next is what? Next other allowable expenses.
Salary for life. For life department staff.
Salaries.
Yes.
How much is the salaries?
3 million.
3 million. Yes, after the salary, which one next?
The allowable expenses for life department. 5 million. Other allowable expenses for life department. 5 million.
5 million.
Yes, sir.
$5 million. Other allowable expenses. So at the end of the day, that means the total expenses for life. The total expenses for life is from 212 up to 5 million. This is the total expenses for life. We minus it from the gross income so that we can get our adjusted profits. That means my adjusted profit is how much? How much is our adjusted profit?
2,592,500.
So we are done with adjusted profit of life. Second working note, computation of adjusted profit for non-life. The second working note, computation of adjusted profit for what?
For non-life.
Non-life. How do we compute adjusted profit for non-life? We normally start with which income?
Investment income.
No. Gross
Premium.
premium. What is the gross premium for non-life? What is the gross premium for non-life? In the question, how much is the premium, the total premium for both the company, for the two business?
72,050,000.
72,050,000.
Out of this 72,050,000, how much is for life?
17,250,000.
When you remove it, the balance is for non-life. How much is the balance? How much is the balance?
54,800,000.
54,800,000. 54.
Yes, 5 for
800,000.
800. Yes.
Do we have any accrued premium for non-life? Any accrued premium from non-life that is yet to be collected?
We have, sir, 2 million naira, sir. That is note 3, 4 million for life, 2 million on non-life policy holders.
Please check note 3. Check note
Yes,
3.
yes. It's okay.
Okay.
It's okay.
So when you add 54,800,000, Abby,
Yes.
plus 2 million, it will give you 56,800,000.
800. Yes.
Do we have any other income for non-life? Other income for non-life apart from gross income? Do we have any other income for non-life? Like investment income, any other one? Can you check the format of non-life? What are the other income? There is one major other income that we did in the first question. That the first question we solved, one small question like this. One of the other income for non-life is called what? Estimated claim of previous year. Estimated claims. What is the estimated claims for last year? We are not talking of this current year. The current year is 2023. Abi? The current year that we are working on now is for the year ended 2023. What is the estimated claim for the year ended 2022? Are we giving estimated claim? Are we giving the estimated claim? If you check, I think there's estimated claim in this question. There's estimated claim. Note 7. Note 7. Look at note 7.
274,000.
Yes. 274,000.
274,000. It's part of
Yeah.
your other income.
Yes.
274,000.
So there is note on note 2. There is message on non-life assurance.
There is what?
There is note on note 2. If you look at note 2, they say something about non-life assurance.
Okay.
And about
Note.
17,500,000 was also calculated as at 31st December.
We are still
2023.
going to look at that. Provision for unexpiries. Don't worry.
Okay.
We are going to look at that.
Okay.
So now that means your gross income is going to be both gross premium plus other income. This is your gross income for non-life. This is the gross income for non-life. From this gross income, you less provision for unexpired risk.
Okay.
That is the first thing that you less. Provision for unexpired risk. What are the provision for unexpired risk? That means we know we are in year 2023 year end.
Yes.
At the end of 2023, how much is unexpired risk?
So let me read the notes too. This is the
17 million
management of the
500.
company.
Yes.
It is 17 million 500.
17,500,000 as at end of year 2023. Unexpired risk is 17,500,000. Abi?
Yes.
Correct, sir.
As at beginning of year 2023, how much is unexpired risk? How much is
40 million
unexpired
naira,
risk?
sir. 14 million. 14 million.
14 million.
14 million.
That means your unexpired risk for the year will be the end of the year minus beginning of the year.
It's 3.5.
If you minus 3.5, do we understand?
Yes. Yes.
Now, apart from unexpired risk, another expenses you minus is called claims. Claim is an expenses. It's an liable expenses, other non-life.
Yes.
Do we have claims in this question?
Yes. Note 6.
Where is the claims?
Note 6.
3 million.
Under the note 6.
Yes.
4,875,000.
75,000. Yes.
Okay, so we use that too. We use it. 4,875,000. Apart from claims, commission paid too is an expenses under the.
Yes.
It's also an expenses. Do we have
3
commission
million.
paid?
Yes.
3
3
million
million
what?
420,000.
Aside that, any other liable expenses again? Any other liable
Administrative expenses.
These administrative expenses now, how much
Yes.
is it given to us?
They gave us 5,430,000, but there is a loss that was inclusive.
You know that loss is a disallowable expenses, I mean, loss on sale
Yes.
of fixed assets.
Yes.
So 5
Yes.
million 430, I mean,
Yes. Minus
5 million 430 minus what?
minus 1,450,000.
Minus 1,450,000.
Yes. We have 3,980,000.
That means
We
3
have
million
3,980,000.
980.
Yes.
Apart from administrative expenses, which one do we also have again as our liable expenses, other
Capital allowance.
under eh?
No,
Now,
aside from capital allowance.
I think we have anything
okay,
again.
we don't have any. So what we need to do is for us to add all the expenses together. Add them. Once we add them, we less them from the gross income. We less them from the gross income. That means my adjusted profits. Adjusted profits for non-life. How much is my adjusted profits? My adjusted profits is going to be 41,299,000.
Okay. All right.
Now, the major requirement, we are asked to compute tax liability. Abi?
Yes.
Computation of tax liability. I want to compute the tax liability now. Computation of tax liability. So adjusted profit, I will start with adjusted profit of life.
Okay.
Adjusted profit of life. How much is adjusted profit of life? 2,592,500. Abi? Adjusted profit for life business.
It's correct,
Yes.
sir.
So adjusted profit again
For
for
non-life.
non-life business. For non-life. For non-life. How much is that? We have that in the working notes already.
41.
4 million. Abi?
419,299.
So that means my total adjusted profits. Total adjusted profits. Total adjusted profits is how much? 43,891,500. This total adjusted profit, I will now less capital. In the question, let's see. What do we have in the question?
We have balancing charge.
We have in this question, we have balancing charge, we have capital allowance, we also have balancing allowance. Do we have balancing charge? I think we don't have balancing
No.
charge.
No, we
Balancing
have
allowance.
yes.
We have balancing allowance, Abi?
We have, sir. We have.
Okay. I will just say less balancing allowance and capital allowance. So let me just, in this question now, I will say less capital allowance, CA. Less capital allowance. This capital allowance, CA, I have brought forward How much is the capital allowance that was brought forward? Let me transfer this one here.
220 million 500. 220 million 500.
The capital allowance brought forward 220 million
500.
220 500 like this.
Yes. Yes, yes.
That is the capital allowance brought forward 220 500. Capital
500.
allowance for the year, CA for the year. They'll have initial allowance, Abi. How much is the initial
Yes.
allowance?
425,000.
425,000.
For 25,000. They also have annual what?
Allowance.
Annual allowance.
How much?
802,500. 802,500.
802,500.
802,500.
And balancing allowance. I'll also
Allowance.
add it.
100, 500.
Balancing allowance.
One hundred, 500. 500.
All these together, some of them, their sum. I will sum them. 1,548,500. I will less it from my
Okay.
adjusted profit. I will less it from my adjusted profit so that I can get total profit.
A total.
So how much is the total profit?
42 million.
4,234. Yeah.
Thousand.
Okay. So this total profit now, I can now compute what? Tax
That's
liability.
liability.
Can now compute tax liability. This tax liability, CIT, company income tax. Company income tax. For the company income tax,
30%.
at what percentage am I going to use?
30%.
30%.
Me, I'm going to use 20%.
Why,
If you
sir?
ask me why? If you add the turnover of the company, the turnover is less than 100 million. Their turnover is less than their gross premium plus investment income. How much is their gross premium? 72 million, Abi?
Yes.
How much is the investment income? 12 million, Abi?
Yes.
If you add it, it's less than 100 million now. It's less than 100 million. So that means their CIT is based on 20%. 20%. 20% of total profits. Since it's less than 100 million.
20%, sir, you're correct.
Now, you now come here, or you compute minimum tax, or you say, for life, 0.5% of gross income. This is for life. For what? For life. You also say for non-life too. For non-life. For non-life. How much is for non-life?
0.5%.
Or what?
Gross premium.
Gross premium. This one is premium.
Yes.
While the first one is income. So now, this one now, 0.5% times this 0.5% times the gross income. How much is the gross income for life? The gross income for life is 12 million. In the working note, you can see 12,055,000. Can we see it in the working note?
It is there, sir.
So 0.5% of it is about 60,275. Why this one? 0.5% of 0.5% times the gross premium. That is for non-life. How much is the gross premium? 56,800. 0.5% of it is giving you 284,000. If you add the two of them, the two minimum tax, if you add it, if you add the two minimum tax, if you add the two minimum tax together, the two minimum tax, if you add it, is less than the actual CIT. That means I'm going to base the company based on actual CIT. They will not pay minimum tax. Assuming the minimum tax is higher than 8,468,000, they will pay minimum, they will pay CIT based on minimum tax. So you can now compute another one called net TET. This TET is going to be based on what percentage? What percentage am I going to use for TET?
3%.
3%. Because of the year of assessment, we are using 3% in that year as from
Yes.
2024. 3% of adjusted
Yes.
profit, total adjusted profit times 3%. So that is the second tax you must pay, TET. As well, you can say
The
NIGDA too. NIGDA.
1%.
NIGDA, yes. The net profit in this question is not clearly stated. They do not give us the net profit direct. So what we need to do, we can say NIGDA will be 1% of the adjusted profits, the total adjusted profits, times 1% of it. So another tax this company can pay is
It's
PDL
police. Yes.
at 0.05%.
0.00.
0.00. Abi,
Yes.
is it correct like this? 0.05%. Abi, 0.05%. 0.05. So of adjusted profits. This is adjusted profits
Yes.
times 0.005%.
Okay.
So this is it. Do we have any question? Do we have any question?
We need to go through it, sir.
Okay. So
When we
just
go
go
through it,
through it.
then can
let me know. So
Yes, sir.
let's call it a day.
Thank you, sir.
Yes, thank